Hello, ladies and gentlemen. I hope everybody is really doing well. Welcome to this live stream. It's Thursday, and so far the week has been going good, normal. Um, the yesterday gold trade did not went well for me. 0.6% loss on the account. However, a good part about our the gold trade was we knew that there was some invalidation. And before I go down and break down towards why I took the gold short. So the reason why I took the gold short was we had a range highs, and I expected this this sort of a very nice rising wedge was there, and I felt like this was the breaking of the wedge. And as you can see, there are a lot of wicks. It's very difficult to have a wave count on this, of course. So basically, what I personally felt is till we were under these levels, we literally shorts at the levels of 930.6, the highs of the resistance to 931, but that level held as a support, and did not even broke. I felt at that point in time that we should close it and probably switch to longs. Honestly, if I have to tell you, and but it was like no, because we have a strong resistance of daily as well, so it's very difficult for it to break. But it was literally misjudged and miscalculation, because remember, when in a set literally accumulates under a big daily resistance, what it does, it's just break out the way Bitcoin did earlier as well. And this was like a miscalculation from my end, but that's fine. Our risk was managed. That's fine. Also yesterday, when I was literally watching, we went close to, this was my short level one more time. As I mentioned, 1940 to 1943, it literally got a very nice wick, an accumulation again and again. And from there, I was expecting a reversal, but just simply went there, so I did not get any shorts. I waited, and then I saw this red candle formed, and along with this red candle, we had a very nice bear divergence was forming on the M15. It was a very clean short. This was the strongest bear divergence you can get on the upside, and with a very high confluence. In fact, our TMB indicator, painted a red candle, indicating that the next move is, we are very close to a reversal point. And you also have a huge confluence, a weekly level, also the 0.886 fib. And I do think that there was a huge confluence. It's just that I was very afraid of taking, because we had already lost 0.6% on account. So I was like, let's wait a bit, actually, but anyways, I mean, this is how it is. This was a perfect indicator. It flashes over here literally that the market is literally going to reverse, and that's what it did. You see from this the levels where it flashed out. The next candle, if you would have shorted it, the upside was literally 14 pips, but the downside was over almost close to 100 pips. Amazing shot it would have been, I know. And the indicator perfectly caught this whole move. In fact, in the morning as well, the indicator flashed almost when I was sleeping. I mean, if anybody would know, this flash literally at 1924 flashed like 3 times in a row that it's gonna pump, and literally it gave you almost close to 28 pips bounce as well. I mean, this indicator is like a free money if you you have it on a chart on 15 minutes. My settings are by default settings. I don't have any sort of a change. The buffer is 1, number of bounces are 3, threshold is same, no change. Only the bar colors I've changed it to red and white. White is the default. I changed the bar colors to red. Rest all is the same, guys. This was very nice. I wanted to give that long as well. And now what I'm expecting on the gold is there's a huge liquidity here beneath this, so for sure I'm expecting this to be taken. However, what I really like to see now is a very strong, we have a H1 here, so I'm just simply going to do range. So the range is where, in my view, it's going to be something like this. This is where the range is now, and that's where the liquidity is. So practically, I would like to see a deviation. We already tested these levels of 1931 and dumped to the equilibrium 1926. That would have a nice scalp. I was literally watching it, but I just got delayed because I was setting up a live stream. What feel is if we do happen to have that one more push up like this, in case it would be a nice short, a deviation, come back down, and then we can go down towards a sweep of the lows to the weekly levels of 1920. The 1920 weekly levels is where I'm eyeing. You have a weekly levels on the highs tagged. Now the weekly levels on the lows, we need to tag those levels as well. And clearly this is now the setup that I'm eyeing today for the gold, and maybe in between I'm going to take few scalps as well, so be ready when I'm going to give you. I'm not going to play any swings, only scalps. Like even for like a 10 pips, I'm going to take it and I'm going to make money for you guys as well. I'm eyeing at least 3-4 scalps today, so let's see what we get it on the 15 minutes chart. The RSI is something we need to watch it, because yesterday was a very clean short, and if somebody calls it perfect. Right now, as you can see, the trend is a downtrend. Once it starts breaking under, it's a downtrend. And now, whatever the blue color you are watching above this indicator, it indicates that the bounces are for shorting, as the trend line, as the the trend indicator says that we are still bearish. The trend is under zero, which means it indicates a bearish. The bounces are for shorting. Any bounce that we get, it's for shorting purpose. The best levels in my view is 1933.4. If we happen to get that levels, in my view, it's a good short. Even if for a scalp from there to the range highs or H1 levels of 1928, and maybe I'll sweep down like this one more time. Overall, what I'm aiming is, the way we have got a sharp move on the downside, what I would like to see is, ideally, I would like to see something like this. Let me show you from the fifth perspective. This is what we want to see on the gold. So the 0.382 and the 0.5 is what I would like to see it tag. Okay, so what I would like to see is a small retracement, hold these levels, maybe one more push up like this, and we would like to short from 1933 to 1935, and then we go one more down. It forms like a very nice bear flag. So if this is how it really wants to go, I would like to see it forming like a double bottom sort of a structure. Maybe it can even go down like this and then it goes up. So if it literally does something like this, goes to 1920, we are longing, guys. We need to see some sort of bullish divergence over here, and when we saw on when we see on M5 or M15, we're gonna take the long from here and ride it till there, and then further break down towards a 1913 daily levels. Now on the hard term time frame or a midterm time frame for the gold, let's have a look at the 4 hours chart. The 4 hours chart, we have a clear bear flag kind of a structure at this point, but what happens is, if you look at from the big fib perspective from here, so let's have a look from the big fib perspective for the 0886. Perfect rejection for the 947 0886, weekly levels of 946, and also our indicator, TMB indicator, flashes the change the color to red. Now if you look at from the RSI perspective, we don't have any sort of a bear divergence on the 4 hours. Neither we have any bear divergence on the daily. We are just accumulating, as you can see here on the daily as well. So the daily is rejecting so far on the trend line, and what I personally feel is that dips are for buying on gold till it's it invalidates. I think it was the first rejection, made highs, another rejection, but did not make a lower lows but higher lows, and another like this. We can do something like this and maybe a reverse, because if you look at from the support perspective, the next support on the RSI, in my view, is very strong support, and this is where I would like to see a bounce from, or we can look for a 2-3 bounce. So this is another big support that we have. So this support is having first rejection, another rejection, a breaker, a retest, a retest, a retest, a breaker, and a retest, and then I would like to see another breaker and a retest. So I think 47.6 is where I would like to see a support levels for RSI to hold, and I do think that for a few days maybe we can see a downside move on the gold. Now from the RSI perspective, the momentum is slightly going down, hence I think the MA retest of 50% is likely. What I would like to see is, this is a very sharp move on the gold. Now I think if I have to count this wave, there are two sort of bounces or counts. First, this is 1, 2, 3, A, B, C, 4, and then 5. But then 5 was too big versus 3. So this count, in my view, does not looks good. In my view, what looks good is this is A, B, C, B, and then this is C. And this looks perfect to me at this point. So this move is A, B, C. And whatever we are watching right now, in my view, this is like some sort of another wave A. It's gonna be like B here, C. So we're gonna take the daily at 1930, maybe one retest of this 1908, like a triple trend line retest, and from there we pump up like this to 1970, and that's exactly where I think it's not gonna be A, B, 1, 2, 3, 4, and we're just going to continue towards the golden pocket zone of $1980. And we do have this harmonic to support this sort of an impulsive move. I think yesterday I mentioned about the harmonic. This is the harmonic that we have, and it perfectly goes the way the target for the harmonic is minimum 1965, and it can even extend to 886. It can go to 975 as well. So we just have to prepare ourselves for higher targets if literally we don't break under or we don't lose this trend line. So this is what we can look for on the gold at this point. This harmonic is really valid, and this sharp correction is literally like A, B, C in my view, or maybe 5 waves. But this move is clearly A, B, and C, and another A, B, and C. I would like to see another A, B, and C, and then another A, B, and C, and then you have a 5-wave structure, a correct zigzag A, B, 1, 2, and maybe even some sort of a 5 waves on the outside. So that's the reason, I think right now, even though we have reached the 886, normally the B wave normally reaches that 886. This can be wave A, this is wave B, and then we can look for wave C towards a double bottom sort of a thing. A possibility is always there. Maybe one irregular flat towards 1875, and this can form like the irregular expanded flat of some sort, and we pump up like this for an irregular expanded flat. This is also a possibility. I mean, I'm not denying the fact that it can't happen, but right now we just want to, on the hard time frame, we want to play the levels. And hence, I've already mentioned what levels now we should be aiming for long and short opportunities on gold on the hard time frame. Specifically, we are looking for a 15 minutes time frame. That is very relevant in my view. So this is what the plan that I have for gold at this point, and what I'm looking for today to play. Let's talk about the Bitcoin. Yesterday, the CPI came very surprising to me. Honestly, I was expecting CPI to come literally around 25 bips. Why? Because the inflation is increasing, and something we need to be very careful of. And going forward, I think the way the market and the structure looks like, I think that if they don't curb the inflation at this point, the next CPI is going to be very disaster. It's going to increase the inflation from 3.7% in US to literally close to 5%, because now there is no increase in interest rate. So let's see what it's going to do. But if you just have to look from the SPX perspective, my plan for the SPX perfectly playing out to the core. I mentioned the scam as well. I think we are literally looking for more and more downside. The perfect bearish retest of the 4467 max. That was a perfect retest yesterday, and then started dumping down to I think I am looking for more and more downside. My minimum target is 4,229 for SPX, guys, and this is not done. This is not done. This is going to go very sharp like what Bitcoin did, and if this happens, there is going to be a bloodbath. There is going to be a black swan. US global debt, US debt crossed almost $33 trillion, guys. That's a very big worry. And the assets that are showing, they have gold reserves worth $8 trillion, highest in the world, but still it's not enough to cover the $33 trillion debt. In fact, their yearly interest have gone to upwards of $1 trillion, so they need to have an outflow of $1 trillion. I don't know how they're gonna pay those sort of money. The two ways it can do is they start a war with Russia, maybe China, and that way they can probably get rid of the debt, something like this, or they're gonna literally crash the market so hard it's just gonna be like a quick flush, take everyone out, and with that we get Bitcoin opportunity to long as well. And the way the market looks like, if this harmonic plays out, then and the probability right now for this harmonic plays out is literally at 70%. And if this plays out, and once the probability is going to increase once we closes weekly under the levels of neckline. Once the neckline we are started to close weekly under 4329, the probability of this harmonic is going to reach to 90%. So right now it's 70%, and I'm still very happy with the 70% probability. And I think, guys, if this literally plays out, this shit is literally gonna go with big dump. The dump is gonna be like, the market is gonna experience some big volatile move towards $3,000, and only God can help US, maybe even the world, because if US little market crashes, you know what happens to the world market. So it's gonna be another black swan. It's gonna be a total bloodbath in the market, in my view. And it's gonna be like, I don't want to talk about much about it, but it's not gonna be the good thing. These are the levels I'm aiming for, some a reset of this whole pump on the US economy. It's a ABC in my view. And people may be expecting, or people might be expecting, yes, a bounce from here, maybe new highs, and then a blow off top the way Bitcoin did. The possibility is that I'm not denying the fact that it's not possible the way Bitcoin did. What Bitcoin did is, in 2021, if we literally smash up the highs, like here. Hold on. So what Bitcoin did is, if we hold here, we push up one more time, or I would say we need to hold the neckline of 4331. If we hold up, we can have a push up one more time, maybe sweep up the highs, and then we start recting and recting and recting, and that's going to be very wild. We're just simply going to target 2076. I mean, closer result is there, but this is literally, to me, like, this right now. I'm not talking about that because everybody's talking about that in the market. But this harmonic looks to me very, very clean. Even if you look at it from the daily perspective, the RSI is literally looking to me like a bearish sort of. And even if you look at it from the weekly perspective, the weekly divergence is yet to play out. My friends, we have a strong weekly divergence or bear divergence on the SPX. You see, when people are literally expecting the market to crash, what we literally want to see is something like this. Here, this was the top. This candle, remember it. This candle, this is where we topped out on the SPX. Higher highs, and the price did not make higher highs. The price made the lower highs. We're having a nice divergence. Remember, the trend is still on the upside. The trend will start being negative once we start going under, and that's going to be a clean dump in my view, and we're just going to go into big bear market at this point. Right now, the trend is yet not shifted to bearish, so hence, we just have to play levels. As I mentioned, once we start closing weekly levels in the 4327 or 4329, it's going to be great for the SPX. But right now, the trend is still not shifted to the downside. The trend is still bullish at this point, but we need to see some shift in trend. Let's have a look at something here. Now this is the U.S. Government 10-year bond yield. You see, the yield has been the highest yield at this point. And if I just look at this chart, as I mentioned, I was expecting this and a pump. If you remember, we checked this in 2021. And since then, the bear market has kicked in after the bull run finished and ended. And now I just want to add one more, chart over here, which is going to be here, SPX. Now, if you look at, I think this is not good. Let's SPX, same percent scale, perfect. No, this is not good as well. I'm just gonna have a new pen. So what I have to do is, I'm just gonna hide it for now. We'll just have the RSI, but we'll talk about the RSI later on. I'm just, you know, we just want to see how they are both related to each other. Perfect. So now we are going to look for a very sort of a how these things is perfectly related to each other on the weekly time frame. What literally happens when the bond market crashes? When the bond market crashes, or when the bond market pumps, or you say the US 10-year yield start pumping. So we're going to analyze this from 1974. That's exactly was the turning point for the US in my view. 1974, and because there is so much data, so let's talk about from the 2008. So that's what the data we have. So yep, here. So as you can see here, in 2008 over here, 2007, the bond market topped with literally the top, as you can see, like a double top. The way we are seeing right now, the pattern is perfect. What happened? The market, the bond market, the US bond market started crashing. You know, when we had a sudden increase in the price like this, and then it crashing. But you see the pattern, and when it start top, and the market also had a very nice top. I'm just going to make it slightly, you know, more interesting for you as to how it looks like the pattern as well. Even the US stock market had a double bottom or double top kind of a thing, and then it started crashing along with it. Then we got a big crash in 2008, and once the bond market starts going the sideways, a pump, a US market pump sideways, it pumped, and then further dump, and the stock market got a nice dump as well. Further pump, US market pumps, dump, and then US market dumps. So, and then it goes sideways over here, and started pumping back up. The market goes up, and what you want to see is when we go into 2019, what literally happened was when you know the market started having a very nice ending diagonal sort of a structure. When we had you know, if you look at from the US 10-year yield, you see what happened. We had a nice top and a dump, and the US market 10-year bond yield started pumping and making higher highs. The market also started making higher highs, but here the only thing is the market literally started pumping above, you know, when the market was literally dumping till here, the 10-year bond yield, which clearly indicates that the market, the public was shifting from here to the market. And then what happened was the bond declined suddenly, and along with the market also dumped. Meaning, even though you may see a fake out like this, when the you know, some small of a fake out like this, when it was like a trap, everybody got trapped in this, and then it dumped on their face, taking all the liquidity. But the clear indication what I can see is that the US 10-year yield, when it topped out, everything is going to top out, and the market is going to start reversing, is what I personally feel. Now at this point, when we are here, literally we are here, when we have a harmonic, the US 10-year yield also looks to me like topping out at this point at literally at 4.4%. Now, you know, why do I feel that it's going to top out? So basically, you have a higher highs, you have a nice divergence over here with the price, and you know, you have a divergences over here. And whenever you see irrational divergence forming, when the 10-year yield is mega pumping, and when the market is not even moving, which clearly indicates that currently the money is flowing in here, people are bullish, and when it start dumping, we might be looking for a nice dump on the US, but that dump might be followed with a nice bull run, you know, a nice bull run probably, but this don't make another divergences, and that's exactly where we get a bull run, and then we flash crash one more time, and that's where the flash crash happens, a perfect reset happens, and that's exactly where what I'm expecting for, a big ABC scenario, and then another bull run starts. So practically, this is how I would like to see a 10-year yield, with the divergence forming. And I do think that, it's perfectly correlated the way the US 10-year yield looks. I think the next big recession, or maybe even the next big dump, is loading on us. On the US stock market. So what I would suggest each and every one of you is, it's just a suggestion, it's not a financial advice. What you should be having is, when this is going to happen, okay, I would request that don't keep all your money in banks. You should be having, a money on your hand, so that when it comes, you literally can go into the market and buy physical gold. Well, it's gonna give you a nice opportunity. And also, you should be, not having all funds in your bank, because in case if this dump happens, and if a lot of banks go bankrupt, you never know which banks is gonna go first. Even if it's like a top bank, we never know. So what I'm gonna tell you is, just have some funds in your lockers, or maybe safe, or somewhere where nobody knows and you only know it. It is safe, but have something in your hand. And when this comes, you literally go in the market, start buying everything. The market is going to go panic. And this is absolutely going to be a big, big, big reset that I'm expecting. We have a nice support here, as you can see. Perfect support that we have. And this support needs to be tested at some point of time. It's like gold. They literally made higher highs, and then the market tests these levels. We hold the here. Again, a bounce happens, and then further breakdown happens. So practically, what you would like to see when this happens, we make lower lows like this, go to these levels of 3,300, maybe even under those levels, a sharp dump and reclaim it back, and then market start accumulating and follows a bull run. And this is exactly where the bull run begins, and we make higher highs and go up towards 5,500, and that's where we make lot of money in the market. But at this point, I think a big dump and a recession is loading for 2024, 2025. 2024 is what, in my view, is going to be the big dump, and it's coming. So we need to be loading. As I mentioned, quarter 1 2024 is absolutely going to be the best. This can be accelerated even in quarter 4 of 2023, maybe October, November, December. We will see. But if it comes, we need to be ready. Even if this happens, now I'll show you something with the Bitcoin chart. So now this is what we saw for the SPX. Let's even have a look what Bitcoin did at that point of time. Let's have a look at the BLX coin index. How Bitcoin is, Bitcoin is going to perform, or how, in my view, it's going to do. So if you look at from the weekly time frame, what it does is, this was our first, I'm just going to show you what we have, the data. Perfect. Let's compare, because I'm doing this Bitcoin chart for the first time along with this US 10-year yield. So let's see what it does. Perfect. You see the pattern. It's replicating. Means it's top, a double bottom top, and then it starts dumping and the bear market begins. And then when it's we got our big dump. After that, it goes into an accumulation. And then, what happens? It's got an accumulation, a bullish divergence on something like this is formed, and the price holds. And then it reverses, accumulation phase completes. On the 10-year yield, it pumps, the bull market begins. So practically the dump is, when it tops, everything tops. It's not only the US market, first thing. Now let's talk about here as well. So this is where it started going slowly sideways. And when the last, dump happened, everything got a flash reset. And then it started again pumping back up. Let's talk about more. Let's see what happened when we literally were topping out at 18,000. The market was pumping, and we literally went into the bear market. Now this is a very different thing for a high risk asset, but yes, and literally, what it did is, it just did the opposite. But then when the market, had a B wave over here, a dump, a B wave, along with the C wave, everything went down. for the Bitcoin, and that's where the overall market also started dumping. The SPX started dumping as well. So partially correlated. I would not say 100% related for now, the way I'm seeing it. Similarly, a bull run started along with it, and where's the bear market hit. Bitcoin literally topped when the 10-year yield find a support. So this also indicates one more thing. That's what I've seen, that Bitcoin normally goes in a bull run when the 10-year yield is accumulating at the bottom. That's what I am seeing so far, and my understanding is when it's accumulating at the bottom, Bitcoin literally goes. So then the money flows from here from the high risk asset to the low risk assets, such as the 10-year yield, as well as the safest asset, the 10-year yield, and maybe even the money is going to flow something like this. So now we are watching here is, if the 10-year yield is topping out, in my view, and that's what it is doing. What we did the previous way when we topped out, and we were literally at the bottom, Bitcoin started a bull run. When it topped out here, we got a dump like this. The first dump happened. It's gonna have a dump, but then it started a bull run. Why? Because then the money started gonna flow from safest bet to the high risk asset, and then SPX and so on. So what I personally feel is, the way we have seen in the previous bull, both the markets, you see, this was a reverse. When a safest asset were accumulating, then people flow from here, remove their money from here and put it here, and then made money. Right now what I think is, if the market is literally topping here, in my view, the Bitcoin is gonna start a big bull run, and when we are literally going, this is gonna be very good for us. So what I personally feel is, we might literally have a smackdown, might be even going lower. Okay, the way we had it here, a first dump happens, and then it goes sideways and further dump happens, but Bitcoin literally go for a bull run. So we're gonna see that, we're gonna see that dump along with the US 10-year yield. The dump is gonna happen. Now that dump can literally go to 18K and hold up, and we start accumulating slowly, gradually, like this, accumulating in a rounded top, and we do something like this, go up, and a big bull run starts kicking with a very big impulsive move like this. Or the worst case scenario is, we go a sweep of the lows like this, and we start an accumulation, and a bull run begins, another pump, and begins. So this is how I think it's going to be very good for the Bitcoin, the way I've seen it. Bitcoin is having not an exact correlation with the 10-year old, but this seems that the correlation is slightly different than what we anticipated for the Bitcoin, which is really, really great. So I do think that the 10-year bond yield market is really good for Bitcoin in my view. When if it stopped, it's going to be a big buying opportunity. Now let's talk from the RSI perspective. RSI on this here is clearly negative. As you can see, a bear divergence on the weekly is forming. We need a little bit of confirmation of this. We need to really wait for another 2 to 3 weeks. Now if you look at from the monthly perspective, we are still having a monthly bear divergence, which is a very strong bear divergence, guys. A monthly bear divergence is one hell of a big bear divergence, So it's a big bear divergence. Probably in next 2 to 3 months, maybe in next 1 or 2 months, we're gonna see or get a confirmation. And this is exactly what we had previously when we dumped. Look at here, a monthly bear divergence. Look at. So what happened? A price made higher highs, and the RSI on the monthly made lower highs, and then a picture started dumping. So we can still really have slightly push up, and then a rejection on this, and maybe going next month, October, November, December, the market starts dumping, and this is how the US 10-year yield is going to dump, and then October, November, December is going to be literally the best buying opportunity in my view for Bitcoin. And probably if we do happen to get this flash dump, once we get the sweep of this lows, that is the most optimal buying opportunity for Bitcoin. You should not miss it. Now, all this sort of analysis, I'm not putting anywhere, guys. This is all for you, and it's only for you. And this is was studied in depth before I've presented it, guys. It's not something that, you will not find anywhere else. Nobody is gonna, every fake gurus is gonna be like, at the beginning when I started personally analyzing USD dominance along with the Bitcoin, I was the first who started in 2020, and then people started following the same thing. And when I'm doing right now with the gold, I'm doing it for the 10-year yield. I'm damn sure in few days maybe you will see all those things circulating because they are here, they are listening to this stream, I'm damn sure, and they're going to post the same thing in my view. But this is what I see, and this is how I see the market. Once it sweeps this lows, it's like a buying spree for the whole market. We are literally going shopping in the market for Bitcoin, for alts, for Ethereum, every damn thing. But remember, the 10-year yield is literally, in my view, going to top out if this bear divergence is going to confirm if on this now September closing and October closing. So this is something. This chart is something you should screenshot it and put it in something. Just save it somewhere. Do it. Screenshot this whole thing. Maybe you wanna. The video is gonna be saved. You can probably you can probably save the part of this video and keep it somewhere else so that you don't miss it. Have an alert mechanism on your chart. Probably I'm just gonna keep an alert here for the 10-year yield. As and when the price comes inside this, we are literally going buying in the market whatever the price Bitcoin at that point would be, because literally historical trend speaks on the Bitcoin that whenever we saw such sort of a dump, the Bitcoin is also going to dump big along with this. But it's not gonna it's going to be the buying opportunity, because what happens is when it's gonna pump up like this and it further dumps, the money is gonna rotate from the 10-year yield and it's gonna flow to the high risk assets such as Bitcoin, Ethereum, and maybe altcoins. So that's what we want to buy, my friends. And we literally, and this dump is gonna happen and Bitcoin is gonna start a bull run in my view. That's what I've seen so far, unless the plan changes and Bitcoin also goes in a hyper bearish mode. Then it's a different story. But in my view, this is how I would like to see. We are having a monthly bear divergence or weekly bear divergence on the US 10-year yield. So something you need to be very cautious. We have looked SPX. We have looked Bitcoin. I would say don't risk anything on the SPX, even if it comes to a sweep of the highs. Don't take that risk, guys. You don't want to lose that money, because the dump is going to be, you need that money on your account probably, even if you hold it for like 2 months, fine. But when you literally get that big sort of a dump, you're only going to get like 4 to 5 hours to buy those dips, because what is going to happen is going to literally flush everyone out of the market. It's going to reset the whole US economy. It's going to reset every damn thing in the world, and we're just going to start pumping back up. And that's exactly what I'm expecting. People are going to be expecting new highs. People are going to be expecting everything on the SPX, but that's not what I think is going to happen. Now let's analyze one more thing. I want to see what exactly in the past or historically, what exactly gold, or how gold is correlated with this. I'm sorry, I didn't plan to have that session, the gold thing over here, but I just want to see. I'm very curious to know what exactly gold does when what exactly gold does along with the US 10-year yield. So let's have it as well. I'm just going to put it up, and put it up. Perfect. So let's say this is the monthly chart, and I'm gonna go to the weekly. Okay, perfect. What normally gold does? Is gold a safe haven asset so that you can plan what exactly you should be putting your money when you feel that the US 10-year is topping out, what you should be holding it? So it's a good analysis. We should be doing it. So you see, when the US 10-year yield is literally topping out here, the gold was literally going for another dump along with it. But when the US 10-year yield literally double topped here and then started dumping, the gold started a bull run, which means that money is also flowing from here to the gold. Interesting. Which also indicates that whenever the US 10-year yield starts topping out, I think gold is your next safest bet, but the safest bet would only be after the first dump happens along with the Bitcoin. So this is what is a very nice, interesting thing. Second thing is, what I personally feel is the US 10-year yield started pumping. You see, the gold started dumping, and again accumulation, and then it started pumping with the gold. and when it started at the resistance, it started breaking this heavy resistance over here, 3%, accumulating at the resistance. The gold started going into the bear market, and then the US yield made a first highs, and then again when it was having a retest of the lows, the gold topped out, and then US yield started pumping. In my view, I think what I personally feel is, the way I see the structure on the gold, I might be very much bearish on it, but the way I see it is, when the US 10-year yield tops out in the coming months, and when we start dumping, gold is going to give that buying opportunity as well. First dump is going to happen, as we have seen historically, that the first dump always happens, and when that happens, I think gold is literally going to go in a big bull run. It's going to pump up towards, in my view, if this is literally going down like this, it's going to pump up to 2,500 and so on. In my view, this looks to me like some sort of a very nice, just forget about the target of 800 or whatever. But in my view, this is a very nice accumulation pattern. It's a very nice accumulation pattern. This is how the 10-year yield is telling me. You see a pump like this in the bull run. When it tops out, the bull run literally begins. So if this is the case, you have a nice pump, accumulation happening here. This is an accumulation. We go to 1875, 1878, and maybe even 1,800 bucks. But this is an accumulation. Once it breaks out of here, it's gonna pump up. The way we got this impulsive move, a very similar impulsive move is gonna follow from here till 2,500 and maybe even till 2,900. This makes it very bullish for gold, guys. So I think when the 10-year yield starts dumping, it stops out, and whatever the dips we're going to get for gold, in my view, we simply buy. We don't wait for 1,500, whatever. Simply buy, and I think it's gonna make us big money. So don't miss this opportunity, in my view, because whatever I have seen so far, I explained to you, it tops out slowly, it start dumping slowly, but it's gonna give you a buying opportunity, and then when it just start topping out more, it's gonna give a big buying opportunity for the gold. So the dips would be for buying for gold, in my view. This is how I am comparing it with the price action for the US 10-year yield on the gold. So gold is also a good bet when the US 10-year yield is going to start dumping, in my view. So I think we should be eyeing for two things. First is the dips for buying crypto, and the second is for buying gold, and gold is going to run in the bull market. So I do think that the market is literally looking for the top on the US 10-year yield, guys. So this is what my detailed analysis was on the US 10-year yield, and this was very crucial, and this is going to be saved, and in my view, this is the indication, and this is like where you should be planning your investments. If you're literally the spot guys, just simply looking at this, and I'm gonna give a bit every week on this US 10-year yield, and gonna see and how it's gonna play out. I'm gonna keep on updating this every damn week, and I'm gonna post this chart and analysis in my corner as well, apart from this video. But what I'm telling you is, when we go and retest this big support that we have at 3%, I'm damn sure Bitcoin is gonna be a big dump, and that's where a big buying opportunity for Bitcoin and overall market is going to come. So we need to be focusing on that. And I do think that right now everybody's screaming highs and whatever, but when the 10-year yield is very bullish, I'm damn sure the money is here right now, and money needs to come from here and flow to the risk asset only when we start dumping and when it gives a signal of topping out, and that's where the money is gonna flow. You get a flash crash to everything, the market dumps, and then we get a bounce. That's where the money is going to start exiting the market, and that is where the buying opportunity for the Bitcoin comes. And then when it dumps, the Bitcoin is going to simply give us some dump of 20%. Every 20% dump followed by big bounces, and this is going to be the best buying opportunity I can imagine of for each and every one of us. This is the best, and in my view, the top-notch analysis any analyst would give on how the market is going to look in next few months. If you like this, please like this video, and also give a feedback on Twitter And if you literally, get benefit of it, and if you would like to support the work, do trade on Bybit. The link is mentioned. I'm not spamming anyone. It's up. It's I'm not asking anyone to compulsorily do it. It's up to you guys. No one is forcing you. And those whoever are doing it, thank you so much for you. Because what happens is, it literally. I'm not the one who is making money from all those things. $21. You know, I don't know how many of you guys know. $21 is nothing, my friends. $21 in this age is nothing for a person. The time I'm giving. I'm giving you free indicators. I'm making it. I'm giving you, the educational content. I'm giving you this sort of analysis. I'm giving you, the what do you say? The bot that is gonna come, the divergence bot. People are literally charging a lot for such sort of thing. They will literally force you. I'm not forcing anyone. You want to use Bybit, use it. You don't want to use it, don't use it. I don't care. What I only care is I want to give whatever the best I can. Even if forget about the trades, analysis, all those things I'm giving. Even $21 is I mean is the lowest in my view. The trades, forget about the trades. People are literally charging crazy $200, $300, maybe even $50. They're gonna give you trades with the least risk reward, and they're gonna show you screenshot with 20x and maybe even whatever. But just ask them, how much they have really made of it overall. And what I'm talking is a real wealth. How to make your wealth, guys. How to increase your wealth. Wealth, you should be planning your investments. How you should be, putting your money. That is something. How you should be rotating your money. That is something. That's how you increase your wealth. That's how you plan your investments. And that's how you be on a safer side when the market literally starts nuking. For example, we analyze gold as well. What we come out of this conclusion is, even if the gold US 10-year yield starts dumping, gold and Bitcoin is the best. The dips for those are for buying, and it's going to be the best investments, going forward. That's going to be, gold is really going to start a big bull run. The Bitcoin is going to start a big bull run when literally it reverses. And that is what, we need to understand is what sort of, things you would want for yourself going forward. Literally, it's like, and I don't want to say much about it, but still, if you have a feedback or a complaints, you can always ping me, or you can, give a feedback that if you don't like it, I'm definitely going to try and improve myself a lot. Don't worry. September is going to be slightly, I started this community on 3rd of August when I left Watch Wealth Group on 27th of July. And, in the span of 27th July and 3rd August, I was literally building things. I planned, I note out everything step by step what I'm going to do. So the first was to have a community, and then you're going to have, the bots and indicators. I want to give a lot of things. And in the pipeline, the backline, things are going on. Everything is running. Nothing is going to stop. Even I got talk with the developer, the RSI divergence. We were having some issues yesterday as I tested it. And now it seems that he has done a superb work. I'm not copying anything, guys. Everything is what I have in my mind. I'm just putting in my chart. There might be a lot of other divergence indicator out there. Might look even same. But whatever I have in my mind, I'm putting it on the screen. I'm gonna give you. So the first indicator was TMV, RSI, SR screener. It's looking good on the lower some time frame. On the hard some time frame, it's printing perfectly. And it's working good. A lot of people are DMing me and saying that it's a good indicator. I just want to say one thing. It's not going to give you a buy or sell signal, guys. It's not for that. Add more confluences. Once you add it, I'm damn sure you're going to make big. It's a free money. You have bots, you have strategic charts, you have a lot of things in the Discord, guys. I want you guys to be independently trading rather than dependent on me. What if I'm not there tomorrow? I still want this community to keep on running. Because if you have everything you have indicators, you have your charts, you have the levels you need to trade, everything you have, you just simply need an execution. And that's where if you feel doubt, just ask me, I'm going to help you as well. The TMV algo indicator phase 1 is completely perfect and it's done. And now we are designing that algorithm, putting all the things in one indicator, and going to design the dashboard, going to run a back testing, going to run testing of how things are. So it's going to take, my plan was to release on 15th of September. It's almost 6 days delay, because the FRVP indicator was the trading view is not giving a source code for the FRVP indicator, and I want to have the FRVP automatically fixed in the TMV algo so that you can get POC value area highs, value area low at one place for various levels, for various ranges. So FRVP, I have to rebuild the whole FRVP. I have to spend a lot of money on that. No, the FRVP indicator, need to test it to make it more perfect and accurate along with the charts. A lot of time have went, and the FRVP, it seems now perfectly working. And now we're going to fix it, fix the whole dashboard, make it, combine everything, whatever the minor bugs we have, gonna fix it so that it works fine for you. So now let's move on from the US 10-year yield to the Bitcoin. What are we expecting for the Bitcoin going forward? My plan for the Bitcoin is pretty much same, and I don't see any changes. In my view, Bitcoin is top. If you look at from the 1 hour chart, my indicator TMV SR screener has flashed the RSI was literally over literally was at a resistance over here. And even if you just consider what exactly the price did from these levels, it barely pumped 8.8%, but it just dumped almost close to 2.4%, giving almost close to 3-hour setup. So if you would have shorted blindly, you would have underwater for like 0.80%, but you would have ended up, not 0.80%, literally you will at 0.3%, and you would have made money for like 2.35%, making it almost close to 8-hour setup. If you have just risked $50 on it, you would have literally made $400 just with the use of this indicator. It's so easy. You don't have to do anything, but you just need to have the levels. Now, what confluences you would personally have it when it flashed? 0.786, August equilibrium. These are the two confluences you had. So practically would have made more sense for shorting. Now, what do we want from the 4 hours, guys? My first idea is still same. There is no change. I'm sorry. You might be expecting me to be slightly bullish on this, but so far the plan is still same, and I don't see why the plan needs to be changed at this point. What we really want to see is we really want to see a breakdown. Now, what sort of a breakdown do we want to see, guys? Well, if you look at from the 1 hour chart, we need to see a breakdown of a trend line. Where is the trend line? Well, here is the trend line. We started pumping from here. That's where. So now we are looking for a trend line breakdown. So that's what we are looking for, a trend line breakdown. And why I look for this levels and not this levels or this levels? Because this level is where another run up and a bullish impulsive move initiated. And that's the reason I'm having this, sort of a thing. So right now, what I personally feel is we are having some sort of a breakdown, and what I personally feel is this sort of a pattern that we are watching. This can be A, impulsive move, A, B, and this can be C. But this doesn't look to me like C. Why? Because this is a very choppy move, and it's like a zigzag and zigzag and zigzag. So this looks to me like some sort of A, B, and C, which clearly indicates that this can be 1, 2, 3, 4, and 5. That's the 5 waves that we are watching. And it's a very nice diagonal sort of a structure. Not exactly diagonal, but a channel sort of a structure. So what you want to see is once it starts breaking under the weekly levels and even closing back under the weekly opens of 26,500, and we'll flip the weekly as a resistance, we literally look for short opportunities here, and then we look for a dump down like this towards 23,000 bucks, and that's what we are aiming. However, in case if it hold the levels of weekly opens and it don't break under, and we flip back the weekly levels again and accumulate, when we were looking for 886 Fibonacci level, and that's where we are looking for shorts. So, and that's where from there I'm looking for more down. So that's what I'm aiming for Bitcoin on the 1 hour chart. Now let's compare this with the RSI. What RSI is saying? RSI is literally grinding. You might see there is a bullish divergence present over here, but the RSI made lower lows, and the trend is bullish. It's not bearish yet. We need to, even though it broke the trend line, but we need the trend to go back down and to confirm the trend is gonna shift and we're gonna dump. But right now, even look at from the RSI perspective, RSI is also at a support. You see this support line. So once the RSI starts breaking under this support, once it breaks here, once it closes, it's gonna dump, and it's gonna dump to the biggest support that we can have a look for. And that's where I think we're gonna short once the RSI breaks trend line. And I do think that we not only gonna go down, but it's gonna go somewhere close to the levels of 26,000 bucks and maybe even this level of support. From there, I'm expecting a bounce to the weekly opens, retest it, and then dump like this. So practically, this is how I would like to see or wait for confirmations, guys. So the RSI 1 hour is a trend line is at a support. Looking at the 4 hour trend line, 4 hour RSI, we are we are having a very interesting, I would say, a very sort of not exactly a bad divergence, I would say here, as you can see, but a very nice perfect bearish divergence here, and it's playing out so far. Now the bullish divergence, this is played out, and now we have a bullish divergence formed. You have a lower lows, and this is how it is. So we need to quickly take these lows of 26,600. So this is where our short is gonna get triggered. Once this is going to close like this, it takes out and flip this as a resistance. We're gonna short it here with the stops above these levels, and we're gonna aim for more and more downside. So right now we are not having any short trigger yet, apart from the levels that we have, August equilibrium, 786 fib, and also the Monday highs that we have. So this range is nothing but your Monday highs. So practically, I would say we need to really wait for a little bit more for a shorts to get triggered. Despite of the fact H1 RSI is at support, H4 RSI is having a hidden divergence, bullish divergence. So we literally need to wait. The trend is on the H1, H4 is still bullish. Talking about the daily as well, you look at the daily trend, there is no divergence yet on the daily. And if you really think what the daily needs to do is, once, I think personally, once, let me show you something. So yeah, there is a divergence, sorry, on the daily as well. There is a strong divergence, my mistake. You have the bear divergence from here till on the downside, where the price made higher highs. However, the daily trend is still bearish, as you can see. The pump that you get is for shorting. So that's what the daily says. And do we have any sort of a reversal? Yeah, there is a slight reversal, but there is no divergence at all on this thing. So on the daily might do something like this, can give you a double bear divergence. So what it can do is it can go down one more time and then pump up like this, divergence, may slide higher highs, but don't sweep this highs one more time and then start dumping. That would be nice if daily can give something like this, which means that H1, H4 is slightly bullish. So we might see one more push on the highs, take the sweep of the highs of 27,500, go to 27,700, gives a very shorting opportunity, and then dump is what I like to see on the daily time frame on the Bitcoin. So probably this harmonic is really valid, and we might be getting, we might looking for, we might be simply looking for H4 3 drive for longs. I don't see a 3 drive on the H4. Where is the 3 drive? Are you seeing? There is no 3 drive. Unless you are seeing this as a 3 drive, but I don't see as a 3 drive. Why? Because this was the first point we had a sell-off. Fine. The another highs that it made was with a huge buy candle. Another highs it made with a high candle. So the 3 drive is really gonna be valid only when the price made higher highs and the volume is declining on each highs. On each peaks, the volume is in a declining mode like this. That's where your 3 drive get confirms. Or yet this is not a 3 drive and it's something else. It's not valid at all. So I think the daily tells me one thing. We might see, if we hold the levels of 26,700, we can risk a long. We can take a risky long. We can look for long from here and DCA till previous week highs of 26,880 with our stops, which is invalidation of 1.28%. and we're gonna ride it till 0.886% or 27,762. The daily is saying that we might be looking for a one more push up like this, take the highs, you know take the highs like this, go to 886, and then we might be looking for a dump. This is what the daily is saying. Even the H1, H4 is saying that the H4 is having a bullish divergence, the invalidation is level is here, and hence our stop loss of even it wicks under these levels, we're gonna have the invalidation level. So I think the daily is looking something like this in my view at this point. But the only problem with the daily is it needs to test, it needs to, you see the daily, the only problem with the daily RSI is, let me show you, it needs to test the MA14, 48.4%, which means that it needs to have a dump to 48%, which means that it can literally go and sweep the Monday lows, and then we might be looking for a pump or retest, and then further dump is also likely. The top might literally be in as well. So I would be very, very happy to long only when the daily touches either 50% or 48% in that case. It's going to be very risky if I literally long here, because just on the base of daily RSI, no. We need to have the levels before I put it. So on the 4 hours we do have the levels, but simply I think we just need to wait precisely. For shorts, let it just sweep the lows like this, have a bearish retest, we short here and down. If we have a pump up like this one more time, we're gonna short it and we're gonna have a dump. Two ways we're gonna play. So this is in my view, the August equilibrium to weekly zone is a no trade zone. It's a very nice range that we have here. The range highs is swept. We're waiting for the range lows to be swept, and once that is done, the whole range is going to be resolved, and we look for more pre-A to form. But overall, my plan is still I'm bearish on this thing. Even if let's say 29k comes and it just goes like this, 28,000, it's gonna be very bearish, and I'm looking for short opportunities as well. So overall, my plan for the Bitcoin is still bearish. TRB, I think this is like A, B, C for the TRB so far. And the first time it's giving us a very nice flag structure, and we need to hold 33 for a more bounce. Once it flips 36, it's gonna run up again and go up to the levels of 48. But as even yesterday Suraj mentioned, as a likely we have some sort of a, we might even look for, this harmonic that we have at 786. The only problem with this is it needs to go for a 786 perfectly, in my view, towards 40.5, and then we can look for here 886 Fibonacci levels to look for a buying opportunities. So let's say if you do happen to get a one more push up towards 40.5 on the TRB, I think we are most likely going to we are most likely going to short it here. If Bitcoin rejecting very hard, we're going to take the shorts. For now, in the 1 hour, I do think that we're most likely going to see a very, very interesting bullish divergence at this point. From this lows, we are having a bullish divergence from this key pivot point. So I think we just slightly need to wait for the TRB to give us a bounce, so that we can look for shorts. Even this is looking good in my view, but I would like to be very, very happy if we do happen to get that bounce over here. It's gonna literally crush and give us 90% dump on the TRB again. But if it just simply give us that dump from here, then not necessarily it's gonna give 90%. I would be happy with the 886 as well, like this. So TRB link rejection was from 7.04 instead of 7.14, but you see people were literally, they literally front run like by 10 cents. Anyways, I mean, this is not even 10 cents, it's perfectly went there. How come it changed? The POC level changed to 6.9 from the yesterday pump, and it literally went to the OB that we have around 7.04, and right now we are accumulating under a resistance of POC. If it flips up, fine, we can run up, but if it don't, it will be a shorting opportunity, and it can look for liquidity under this. So there is some opportunities coming on the link as well. EGLD guys, congratulations for those who bought with me. Got a nice can move yesterday, but as I mentioned, it's not gonna be happening in a day or two, because we are still, the weekly is still bearish. It has not flipped the white, the 0% levels. The trend is still bearish. Even the RSI, is testing the MA. So we have yet to flip this. Once this flip, then it's gonna have a big move on your side. So so far from my buy zone, I have not booked any profits. 22.9 is my average. As I mentioned, nobody can literally catch the bottom. The bottom was 22.3, but exactly because I started buying from $23, and here it literally pumped up almost close to 27%. And as I mentioned over the previous live stream, this is a bullish engulfing candle on the weekly. So the dips are for buying, in my view, for the EGLD. And still we are not breaking up. This is not breaking up yet. This is not break up. What exactly is going to be breaking up is once it starts flipping the levels of 29.8. It's a big range resistance. Once it starts flipping these levels, oh god, this is going to fly. Range. So once it starts breaking these levels, it's simply going to pump up. Until we are under, it's an accumulation zone. It might literally fall one more time from here, like this, and go for an accumulation. But till we are under this, it's a good buying opportunity. We are catching some knife. It's a nice falling wedge, 24% move. So let's see what happens. If you look at from the weekly perspective on an RSI, there is no bullish divergence yet. There might be having a slight bullish divergence. Yeah, there is a bullish divergence here, and on this candle there is a bullish divergence where the RSI did not sweep the lows, but I would say it's not that strong bullish divergence. There is a divergence, but not kind of a strong. I would expect monthly. There is nothing. 3 days. Do we have anything on the 3 days? Nope. 2 days. Another. Nope. Nothing. So even the daily has been breaking to 57% levels. The way it is going is not good. What you want to see is, or what you want to see is, don't want the RSI to go above these levels. Reject, just reject, come back down, retest these levels, accumulate, and then run up with a big force. Then it would be amazing. Simply going up like this and making a bad divergence don't make sense. It's gonna be then dumping a lot. So, but the good thing is the daily have started flipping bullish. The dips are for buying. This is what it's saying. The money flow index is slightly, it has reached its peak, and maybe next few days we are going to see some huge buying activities on EGLD. We just need a momentum to get going. We just want a look at the lot of our indicator, RTMB, RSI indicator have given us a buying opportunity not only once. A 25% move. This was here. It dumped. This is where it indicated another buying opportunity. Indicated here a pump for like how much? Here we get like 6% move, and when it literally gave a signal over here as well, it gave you like almost 27% move on the daily. So 1, 2, 3, 4 times it flashed. 4 out of 3 win. 1 was a loss because it dumped. If you simply follow this, you still can have almost close to 75% win rate, and you can make nice money and the swings. But yes, again, I'm gonna say that this is not a, what do you say? This is not gonna be the indicator for buying or selling. But yeah, EGLD, this is what I'm expecting. I'm tired now, and I'm just gonna focus on the gold swings. So let's see. I need that 2-3 scalps today, and I need to make 2% today. Need to recover 0.6% loss, and need to make 2%. The 300,000 bucks account is literally close to 30% move since September I begin. Last week was amazing. The previous week was amazing. This week we had a slow start. Took one gold trade on Monday, win. Took two gold trades on Tuesday. One was a loss. One was a win. Net profits. On Wednesday, even at night, we took one more short scalp. Was a win. So practically, I would say, on Tuesday we took 3 trades. One was a loss. 2 was a win. And yesterday we took one gold trade. That was a loss. Overall, so far this week, we have took almost close to 5 trades on gold, 2 losses and 3 wins, and 3 made a nice money. Overall, it's a win. If you have managed risk, you should be positive and not negative. So overall, so far this week, our win rate is 60%. Last week, there was no loss at all, and we literally took almost close to 10 plus trades in just a week. So it was a great thing. Not every week is gonna be good, but yeah, we can try our best. So let's talk about, I'm not gonna check all, but maybe we can check one more alt, which is gonna be Maker, MKR. So let's talk about the Maker as well. Look at yesterday when I mentioned that don't short it because of this thing. When we are at a 0.886, I don't see any divergence yet. And now we have a divergence. There is a bearish divergence mojud on the 1 hour chart. As you can see, the price made higher highs. And there is a very nice bear divergence forms. Any bounces do we happen to get it on the Maker? I think it's for shorting purpose. And in fact, if you do happen to get one more push up like this, in my view, it's going to be a very nice diagonal kind of a structure. It's going to be very nice shorting opportunity. And we look for at least you should be eyeing for 1282 and maybe 1250. From there, we're going to see what we want. But for now, this is how I see that Maker is bullish on the 1 hour time frame. Now, looking at the 4 hour time frame, yes, same, a bearish divergence is present on the 4 hour as well. The RSI is heating up. Everywhere there is a bear divergence, as you can see here as well. Price made higher highs. You have a double bearish divergence again, but you know the 4 hour 1 hour is saying that yeah, we are turning bearish. We need that one more sweep of the highs so that we can literally look for a shorting opportunity at this point. Now from this bear flag is invalidated in my view. Now what exactly we are eyeing for the daily time frame is what sort of a move this is on the Maker, because this was your flash dump, was your ABC. We had a diagonal. It clearly indicates or is indicating that what is, if it just gonna make higher highs like this on the Maker and the RSI stays under, it's gonna be another bearish divergence. So then everything is gonna align. So what it tells me that this move 5 waves is some sort of a wave A, B, C, and we're going to form a range here. That's a range. We're going to go under, no under, and maybe accumulation, and then we're going to start pumping back up. This is looking great to me at this point. Or this can be a big, because we swept these lows. The lows were swept. This can be A, B, 1. This is A, this is B, and we are doing C here. So that's going to be the quick C, and then we start dumping back again. I do think Maker is going to have that one more push up, guys. So have some patience. Let the 1 hour 4 hour have double bearish divergence and you can short it. Thanks a lot, guys. Have a nice day. We're going to have another live stream in evening, and before that we're looking for shots on, we're looking for some trades, especially on gold and maybe even some alts. Let's see what we can catch up today. Thanks a lot, and have a nice day. Bye-bye.